All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, August 8th, 2022. If you're not done so already, give the video a thumbs up, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, do we have a cycle trigger? We might. So last week, I gave my cycle date out to members. Obviously, that was today, August 8th. And we got a gap and crap on our hands. So we gapped up here, spiders, 1, 2, 3 push into the 10 a.m. time frame, and then it was all downside from there. Very interesting action here. So, and by the way, if this ends up being the top, it's going to be a pretty accurate call there, I would have to say. And by the way, I am teaching this stuff in the cycles course later this month, August 21st. Come sign up for that. Mind-blowing stuff in there. And just like this, I didn't know that this was going to happen. I just knew that that's what the cycle was telling me to, basically look for a turn around August 8th. And we may have gotten one here. Now, there's a couple things why we could still trade up. Take a look at, let's take a look at ARC. So ARC's green. This is one of the things I use a benchmark kind of stock here. You see intraday, and it's up 1.5%. It's faded off the highs, but it's still green, and it hasn't really broke the lows of the days. And I use this for a benchmark of risk. We're also seeing kind of like another benchmark stock of risk is Tesla is still green. Take a look at GameStop, AMC. We're also seeing kind of a dash for trash. We talked about Carvana last week, making that move up to, let's see what it got up to today. I didn't know. Yeah, it got all the way up above $50. So, we're seeing these squeezes here. We talked about Coinbase last week. That one's squeezing as well. But GME, AMC, and the Russell 2000 here, see in the corner of my screen, kind of looks like ARC today, but still holding the gain, still up over 1% right now. So that is kind of your, one of your things there that says it's not fully risk off. The other two things is take a look at the, we'll just look at, we can see the Russell here, but the volume's a little bit higher, and we're actually green. But if you look at the spiders here, we're flat to negative today. And the volume is lighter than Friday, so we got about 45 seconds left in the day. We'll probably get some market on close volume. Maybe it ends up beating Friday's volume. It's possible, and they might pop us up. We're only down 40 cents right now, so they could pop us up to close us green into the close. But point being is there's not a lot of volume, and you guys know I've been beating the drum for the last month or so, saying, look, if the volume dries up, we got to give the market an upside bias, and that's partly why I'm not necessarily convinced that the sell-off is totally for real, but the top still could be in. We still could chop around for a few days, and then when the volume comes in, I expect the market to continue lower. But either way you slice it or dice it, nice reversal here. Now with the cycles, and there's the market closing, by the way, so we are officially going to close negative here, down 42 cents on the SPY. But with the cycles, the way it works is, sometimes you can get it to trigger 2 or 3 days beforehand, or sometimes 2 or 3 days after. So we could gap up on the CPI and maybe we sell off, and that's the trigger. So there's definitely that possibility right now. Definitely wouldn't rule that out. Again, the volume also being a factor, the fact that there's risk stocks being green, and really the other thing that I haven't really heard too much mention of today, but if you take a look at the bond market, look at TLT, it's up 1.6%, but from an intraday perspective, it just kind of floated higher. And when you see bonds just kind of shrugging, it's generally telling you that there's not a huge problem, at least immediately. So if we were going to see, a major turning point or a sell-off, usually the bond markets, you want to see the bond market freak out. That's kind of what you're looking for. We didn't see that today, but it doesn't mean it can't happen over the next couple of days. Doesn't mean that CPI doesn't change that. So either way, nice little gap and crap date. We still closed barely negative, but it was a pretty good reversal candle here on the spiders. We've talked about how extended the market is. The triple Qs went up here into this red bar high and reversed off of that. So if we take a look, back in at the SPY, we tried to kind of put in some bullish chop here, but this looks more like a failed breakout to me than anything. Remember right back here, we tried to break out prematurely, and then we ended up rolling over a few days later. It looked very similar to that to me right now. And going back over to the Russell that we talked about a minute ago, that's not a, we were green, but that's not a bullish candle. So when you gap up after a big move and then you sell off the highs and put in a topping tail like that, and fill a gap and go into massive, look at this red bar here, look at these pivots. That's good resistance. So, I said over the weekend, risk right now favors, it's to the downside. Realistically, how much higher do you think the market can go right now before it has to have some type of correction? We're up 55 points here from the lows in, like 6 weeks. That's a major move here on the spiders. And I just can't see any scenario here in the near term other than maybe like a blow off gap up on CPI that would really give you significant upside. But that's just the way I see it right now. Anyways, so let's go over some charts here like we typically do. One of the other kind of bear kind of signals here was the semis down 1.73% today. So they did come off the lows, just like everything else did, but this really led to the downside. If we flip back over to the intraday, you can see this gapped down, everything else gapped up, and we rolled over pretty sharply. Did make a higher low towards the end of the day, but that led to the downside. Obviously, NVIDIA came out with kind of it was like a forward guidance thing, and that gap down came off the lows here, but pretty good volume there as well. But that's kind of your red flag. You never want to see the semis lagging the market. We want to see the semis leading, and especially when they're leading to the downside, that is always going to be a red flag. But moving on here to cloud software, so IGV did manage to scratch out 2 pennies gain, basically flat there on the day. Again, kind of looks like the Russell here with that move up and then kind of that topping tail there into resistance. So, we came up here to this gap window, didn't quite fill the gap from May 4th, but, you came right into this area and then you pulled back off the highs. Again, I told you guys, it's going to have a lot of resistance in this zone. In cloud software, it basically performed with the market here, not down like the semis were, but, still overall, this market is just very long in the tooth here, and we're much closer to resistance than we are support. XBI Biotech here up 1.72. So got above that 200 moving average. Still concerned with this pivot up here. Maybe it goes up there and tags that. We did put in that bull flag and had a kind of nice little gap up, and then a surge there. Looking at XBI and biotech, a lot of that is kind of those risk stocks. A lot of those ones that have been beaten down. And, we're seeing that kind of, the dash for trash there. We just talked about GME, so XBI getting that bid as well. But again, very close to resistance there on the daily. And then Dow Transports, again, kind of a bid up here. And then, again, coming nicely off the highs. So we filled that gap on the transports there, pulled back off of that, closed back inside of that red bar. So you're still technically inside of this red bar on a closing basis. So again, there's a bit of a mixed bag here today. We had some sectors that were kind of greenish, and we had some sectors that came under pressure, but overall, like I just said, we're getting so close to resistance here on a lot of names, and I can't see a whole lot of upside here in the near term, as far as I can tell anyway. Anyways, let's talk about rates here. We kind of briefly touched on that. So 10-year down 2.64, still inside of that green bar from Friday, and that is a failed head and shoulders. Same thing on the TYX, still inside of that green bar from Friday as well. So rates are looking, poised for a move up here, and that could be your catalyst. Again, the CPI number could be the catalyst for everything, but I just know what the charts are telling me here, and whenever I see a failed pattern, I usually expect a big move in the opposite direction. HYG is actually hanging in there, but came off the highs. Just like everything else, we'll see what this does over the next couple of weeks. Again, the bond market not really freaking out. It was really just inside of Friday's move pretty much all day long, so we're seeing some cracks in the armor, but not necessarily major sell signals, at least not yet. Anyways, XHB home builders, again, topping tail, gap fill. These are extended here. I do not like the home builders right now. ITB, same thing, still just didn't make a higher high. VNQ did not make a higher high, kind of gapped up and put in a little doji there. So that's still struggling with that 100 moving average. I'm not a fan of these real estate names right now, especially if rates continue to move up. XLF here. This actually hung in there okay. It did finish negative, but it gapped up and just couldn't hold the gains there. Broker dealers still just chugging higher. If this wasn't an actual index and it was an equity you could short, I would totally short this though. For the record, right into that pivot, red bar, rejection on the 200 moving average. I mean, like your risk reward here. Look how extended this is over the last couple of weeks. I mean, just a monster move, basically 380 on July 14th. Here we are August 8th, and, we basically hit 460 I mean, just parabolic move here into major resistance. Broker dealers are very, very stretched right now um, on the daily, and they've had a nice move here, but again, the inverted yield curve is going to come back and haunt these financials. Anyways, crude here, so didn't do a whole lot today. Wasn't really on the radar much. Just looking more at the equity markets. We're still looking for one more little leg down. We're very close to our levels though, and I will be getting in this when they hit. But crude kind of a nothing burger today. Just kind of hanging there, up 1.62%. Nothing major to go on there. XLE, same thing, looking for another leg down. OIH, XOP, one more move down, and then we'll have a good buying opportunity there. Nat gas did also get down to that green bar low here today, so it held that trend line. I don't really have a bias on this one way or the other right now. If this trend line breaks, probably go back down to 7 and then 650. But if it holds up, we'll see kind of make a higher high. If it can, then you're going to go challenge $9 again. But right now, I wouldn't do anything with nat gas. Dollar index, a little bit of a nothing burger as well. No real new movement, just kind of an inside hammer inside of Friday's candle. So nothing really going on there. But gold did hold up well. So we had that reversal Friday. And I said, this is actually kind of a win here for gold, even though it was red, because you finished nicely off the lows and, got a nice little bid back up today. If this can consolidate a little bit, this has another leg up in it. GDX performed well, up 2.74%, which is a big move for GDX, believe it or not. And then silver up 4% today, powering through that 50 moving average. I don't think it's quite ready to get through this 21 area yet, but a nice little power move there for silver futures SILJ. Up 3.12% as well, and platinum continues to be a powerhouse. I like this on dips, pullbacks. I think they can be bought right now, so I do like platinum. And palladium also with a nice day getting back above this trend line. And then copper finally making a higher high. We've been talking about kind of like an ABC up. I don't know if it's ready to push yet, but it should get up to that 370, 375 area. But in any case, nice little bid there for copper today from that oversold condition. And then lastly here, coins up nicely as well. So Bitcoin and Ether up, not heavily, not crazy. Bitcoin up 3.25, Ether up 5. Polkadot did have a nice day, up 7.25 here. So again, some of the risk assets are outperforming here, and that's why we're not really seeing a huge kind of, from my perspective, we're not seeing like a major sort of risk off with this sell-off. It was a nice sell-off. It was a nice little gap and crap. We finished lower here. Pretty good reversal. I mean, nice little bullish bull fake out there. But overall, I want to see the volume heavier. I want to see the bond market start to freak out. And I want to see, I don't want to see arc green, basically. So once we get those things, then we'll have a confirmed top in place. But until then, the the light volume can give the market an upside bias. So we'll take it one day at a time. Anyways, guys, I'm going to wrap it up here. Come find me on carnivoretrades.com, and I will talk to you all tomorrow.